All right, guys, welcome to the trade recap of 26th June. Now, today we had a massive sell-off. You can see all the way from the top till the bottom. 1,000 points. Market open, 1,000 points. How you could have caught this entire move. I'm not talking about catching 200 points. I'm talking about this entire move. Pretty simple. So we're gonna take a look what happened yesterday, right? So let me just get my indicators. So what exactly happened? I'm on the 5 minute. Where am I looking? Okay, I'm on the 5 minute chart, right? Look, yesterday New York session we had a pretty choppy opening, and then we just kind of like kept crashing all the way down to 28,964. This is basically the CFD chart, but I trade futures as well. So what happened is we had Micron's earning, right? In the last hour, in the PM session, we pumped up from 28,900 all the way to 29,800. That's almost like 1,000 points, right? This pump. Now what happened is we left a lot of imbalances. When we leave imbalances, market always comes back to balance it. So these imbalances, you can see the imbalance here. One. You can see this imbalance right here. Okay, now think to yourself, if the market already pumped up 1,000 points while everyone is sleeping, okay, the last hour maybe there might be a less amount of traders trading, right? So what happened today? Pretty simple. You don't do anything in the Asia and the London session. We don't trade those sessions. We only trade the New York session. What happens here? Let's have a look. Yeah, this is the previous day high that we have set. This is the previous day high, 29,869. This is the Asia session. We come back down. We are accumulating, slowly building up trendline liquidity. Go watch my first lectures. I told you we need to identify the types of liquidity that has been built up in the process. That way we can just sweep them all. We are building what? Trendline liquidity. Number one. What is number two? Man, this is the camera right here. I just keep forgetting and I'm looking at the screen. Second, and the most important thing, what are we building? The next type of liquidity. You can see right here, the breakout buyers. Oh, we have a candle close on top. Let's enter. So we have now two types of liquidity in the market. Number three, we have the breakout and retest. And number four, they say break of structure to the upside. Now let's look for an imbalance to go long from, right? A lot of people might be going long from this area, seeing this order block, FVGs on the 5 minute or the 1 minute time frame. But we need to understand, keeping in mind that this entire move left a lot of gaps. So what exactly happens? Just look closely, right? What exactly happens? We sweep this high. Let me just get rid of this. Oh my goodness. Where did my indicator go? Alright, never mind. Forget about it. Right? We sweep this high. Now I'm going to involve time as well. I'm going to show you how time actually supports this, right? We sweep this high, which is the previous day high in London. But we do not care about that. What do we care about? Us sweeping the highs and lows in New York, because this is NASDAQ. That's when the volume is crazy. What exactly happens? I want you to look at this, right? 8 a.m., 8:30. You can see 8:30, we have this huge wick, right? You can see that when we sweep all this, we come and close below, right? What is my second and the foremost important thing that I need to look? I need to look on the left side. What am I looking on the left side? Is there any sort of PD area that we are rejecting from? Oh, not a coincidence, right? 15-minute fair value gap, negative fair value gap, right? 15-minute negative fair value gap, 15-minute FVG. You can say it's an imbalance, right? We tap into the imbalance and we reject from this prior sweep of the previous day high. Now I want you to understand, the first sweep without a break towards the downside will always get swept. Just look at this, right? The market just puts this gap up, sweeps higher, inverses it. But do we close below this last down close candle? No. Do we close even below this? No. That means this is going to get swept most of the I mean, you can backtest this. This will get swept 90% of the time. We set this up, We are rejecting from a high time frame like 15 minutes fair value gap. We are closing below. What exactly happens? I would like to come on the 5 minute. Actually, let's go to the 1 minute, right? What exactly happens? We sweep and then we leave this big imbalance, right? You can see this big imbalance on the 1 minute. I want you to look at the time. Look at exactly the time, right? 9:30 is the market open, sharp 9:30. What do? We come all the way down, closing. This is the last down close candle that failed to make another high. You see, we have this push up from the imbalance. But we failed to make high. We did not break this high, and this high was basically, I mean, we couldn't go past the we couldn't. This high is like it. The market tried to push all the way from here, from this imbalance, but it couldn't create a new high. So what exactly happened? Now this high is basically where I would not like the market to go. We closed below this. You can see we closed this series of candles below this area, right? So that means I know that we are almost starting to break. What were my key confluences? That yesterday we left a lot of gap. We are already bearish, right? And then what exactly happened at 9:30? I want you to pay close attention, right? Exactly at 9:30, let's get rid of the drawings, right? I want you to see this order block right here. People might say this is not an order block. Sure, that's your argument, right? This is how I mark my order blocks, because this was the last up close candle before we trembled down. Which was the last up close candle? This was the last up close candle. I'm talking about exactly this. You see this candle? This candle right here. I want you to actually, look at it and understand. This candle right here. This candle, I want to mark it exactly like this. Let's mark this candle. And this was the last candle before we broke and took these lows, right? You can't tell me, oh, this was the candle. No. Last candle before we dumped. Last candle before we dumped. All the way from 29,900 to 29,830. That's a 70-point drop. Now look at this. You can't be telling me this is all, I mean, this is all made up. 9:30 candle. We wick up, we tap. This could have been your entry. Exactly here. You put your stops here. Oh my goodness, what is that? You put your stops here. This is your entry, right? That's it. That's your stop loss placement. That's your stop loss placement. Not here, not here, exactly at this order block. Because if this gets invalidated, we go out for a small stop loss and then we can actually look for shorts from here. But there is no point because we don't have any sort of gap, imbalance, order block that we need to fill. So it doesn't make sense. If the market goes somewhere here, that means we are going to continue higher, right? What exactly happens? You see, we tap this exactly at 9:30. In my notes, I have clearly mentioned. Look at that. Summer, this is you because I live in Dubai. I have timings, right? Look at this. 9:30 a.m., 5:30 p.m. is New York time, right? And 10 a.m. and 6 p.m., which is in Dubai, is New York reversal time. That's where inducements happen if the sweep is not done in London session. And 8 p.m., 2 p.m., 10 p.m. Dubai, there is power hour. Winter and summer have different timings. So what exactly happens? We tap into this, and you tell me exactly where is the previous day low. This might sound crazy, right? But this is the previous day low. You could have caught this entire move all the way till here. Now, I've been seeing recently what's happening these days is we are coming close to the drawn liquidity, but we are not actually taking it. So what exactly happens is we come all the way down and then we just reverse. Now, I want you to pay attention to second thing that was in my notes. This entire move, I'm talking about 1 is to 70. So basically, if you're risking $1,000, you walk away with $70,000 on this trade. And this was just like, this was the cleanest setup. Another confluence that gave me a lot more, a lot more confidence in taking this trade is basically, if you just look at this point, we accumulated here. This was the accumulation phase for me. All this is just basically accumulation, right? if you know AMD, which is called accumulation, manipulation, distribution, right? Accumulation, manipulation, and then what do? We do the distribution, right? This is like the cleanest and the easiest setup, and you need to keep in mind these things only happen on Tuesdays, Wednesdays, and Thursdays. Most likely Wednesdays and Thursdays, not on Mondays, not on Fridays. Okay, now look what I'm talking about, right? All the way, I notice I say right a lot. Anyways, we come all the way down. Okay, come all the way down. Now look at this. Tell me, and what I've written it here: 10 a.m., 6 p.m. New York reversal. What exactly is the time on this candle? 9:59. What exactly is this? I mean, just look at this candle, right? What exactly is the time? 10 a.m. And you see, the moment we tap on 10 a.m. and we have the liquidity below, we decide not to take it. What do? We give a huge reversal, 28,900 to 29,400. It's like 500 points. Now imagine you took a long here just based on timing, right? You went long here, exactly here, and you put your stop something like this. That's basically 35 point stop, and that's it. Look at that. You target the swing high, right? That's 1:10. Clean 1:10. I'm not talking about 1:2 or taking trades like these. I'm talking about something like this. Let's imagine now you say, oh, I want to be safe and take a better entry. As soon as 10 a.m. happens, the candle closes above, maybe here or maybe here. You can take this long as well. And then the entire day we basically were just chopping. I mean, this is some garbage price action, right? You can be shorting these swing highs, swing lows from these fair value gaps and imbalances. But what exactly are we talking about? We are talking to take these type of entries, right? One, I could have never caught this move because I was not on the charts. The only move that I caught yesterday was the sweep of these highs right here, as I showed in the video. The sweep of these highs, and then we have this delivery change over here and all the way down. It was a choppy price condition, but still we aim for these lows. So this is basically everything that I do every day, and this is all for free. You can just watch this video, try to understand why am I doing this, and try to understand without price and without timing. Price is just basically nothing, because you need to understand this, right? Let's say trader number A enters short here. Okay, he enters short here exactly at the same price, 29,890, and he puts his stop somewhere like this. Now this is the guy who is going to get vicked out, but this guy who patiently waited for the market to create a setup, to create imbalances, to respect the time, this guy banked this entire move. He might be getting some FOMO, but it was just so clean. I mean, you had no up close candles. It's all dark down red candles. So think about this. Timing is very fractal and very important. You can't be just entering the trade and putting a stop loss like this. Look at this. The difference would be 1:5 and 1:70. That's absurd amount of difference. That's it for this video. This is basically, I'm giving you the proper sauce in this video. You need to understand, get these indicators: fair value gap, lit timing, market profile by Joshu, PO3 trades, exit trades, SMT Pro. I like this to it helps me, spot the SMTs. Right. These are the indicators that I use. This is basically the chart work I've explained. We had, we had these trendline liquidity built up, breakout buyers. I've explained this in the video. Go watch it again and again. Try to understand. In the next video, or at the end of the week after tomorrow, I will be creating a video where I'll be showing you the exact steps that I look for before I enter the market. Previous day high, previous day low, and then we can actually talk about this expansion right here, because I've noticed something, and this was the yearly accumulation, manipulation, distribution. You can see we start from 2026, right? This is 2026. 2026, entire time we are basically just manipulating, accumulating, right? All the way till the end of first quarter. You can see Monday 30th, right? This is just ranging. What happens is accumulation. This is our manipulation. Beginning of April, beginning of second quarter. The first quarter was accumulation. The beginning was the manipulation, the second quarter, right? You can see exactly on 8th or 3rd, you can see the last day here. In the end, we just manipulated to with the downside. 31st, 1st of April, you see this big up close candle, that's the beginning of the expansion. So this is the manipulation. This is basically, okay, how do I change the color? Hold on. This is accumulation, this is our manipulation, and this exactly is our expansion. All the way you can just target all-time highs, right? All the way we had this expansion from here. Accumulation, this is yearly. You need to understand market moves in cycles. It just not randomly decides today I want to pump up. Even news is predictable. Everything is predictable. People might ask me, okay, if all this is predictable and you know so much, where is your Lamborghini, where is your Ferrari? Why do I need to show it in the first place? And second of all, I would never buy such things until and unless I know these are not going to affect me drastically and change the status of me financially and make me flex on people for no reason. I don't want to do all that right now. This is gonna take time. But the moment I get it, I'll be rubbing it all over the place. I'm just gonna show it all over the place. So that is it from this video, and meet you guys in the next one.